Well, good afternoon. Hope everyone's had a good Canadian Finance Conference so far. My name's Katherine Chiglinsky. I help lead the investing team here at Bloomberg News, and I'm honored to introduce Andrea Dore, who works as Global Head of Funding at the World Bank. And it was interesting in preparing, I said, the World Bank has funded a lot more than you think, more than 15,000 development projects across so many countries that I dare not even tally. Andrea, could you maybe just give us a bit of an overview of how the World Bank works and how your role really fits into it?
First of all, well, good afternoon, everyone. And I want to first thank Bloomberg and MBF for the opportunity to be back here. Great to see a full room, and I think probably a number of investors, hopefully, also in attendance. So I just want to say thank you. Like you mentioned, I head the funding team for the World Bank. And it has been, I've been at the institution for almost 2 decades. Actually, time has gone by fairly quickly. So the group that I lead, we raise funds for the bank in the international bond market. In fact, we have been a very active issuer across the market for decades now. It's the World Bank here. In fact, maybe what I could probably go back and probably explain the financial model of the bank. The bank basically, shareholders have put in a certain amount of capital in the bank. In fact, if you take, for example, IBRD, the International Bank for Reconstruction and Development, which is the largest entity of the World Bank Group, shareholders have put in just over, say, $22 billion in terms of paid-in capital. There's a portion of callable capital, but $22 billion of paid-in capital. We have taken that $22 billion and go into the capital market and leverage that $22 billion to raise funds for the bank. And over the 80-year-plus history of the bank, we have raised over $1 trillion. So it's a really efficient model. So what we do, we take that funds and we on-lend it to our member countries, developing countries, and to be used for development projects. So the leverage of that $22 billion, and the goal here is for us to raise funds at the lowest possible cost. And the reason that we're able to do that is because we're a strong financial institution. We're rated AAA. We've policies in terms of risk policies, very strong risk policies. Great backing from our shareholders. So we've been able to raise funds at a lower cost and pass on that benefit to our member country. So that in terms of the financial sort of model. Example in terms of how much funds that we have raised on a yearly basis, if we take IBRD, the International Bank for Reconstruction and Development, is the largest entity, as of the World Bank Group. It provides funding to middle-income countries. Last year, we raised the highest amount in the bank history, $64 billion. We expect a similar amount of funding from the institution, so we raise on average between 60 to 65 billion a year. We also raise a notable amount for either the International Development Association. It's a part of the World Bank Group that provides funding to the lower income country. And so last year we raised 19 billion for that entity. So it's a very impactful institution, like you mentioned, in terms of some of the projects that we finance globally, the largest source of development finance and expertise for developing countries, and the bank in terms of the impactful sort of investment.
Yeah, and I was going to say you have a great vantage point looking at all sort of investors and appetite for these types of deals. You know, earlier this year, the World Bank issued a USD bond with its largest ever 10-year order book, and even re-entered the Canadian dollar bond market for the first time since January 2024. So could you talk a little bit about investor demand for these offerings and your approach when it comes to entering the USD bond market or the Canadian dollar one?
Maybe I'll start with Canadian dollars, since it's a Canadian dollar conference and we have many Canadian investors in the room. We have been very active in the Canadian market. In fact, we have done, since our first transaction, a couple of decades ago, we have raised over $10 billion in the Canadian market. It's a market that we have a great relationship with many investors in that market. We try to take a very strategic approach to that market and try to be present in the market at least on a yearly basis. The product we provide is driven, obviously, by investors' demand. We try to make sure that we're in constant dialogue with investors. We're to be able to calibrate the demand in terms of the funding requirements with investor demand. We have been able to issue across many maturities. The most common or popular one in terms of demand has been the 5-year part of the curve. Last year, it was probably the longest. We were consistently, like I said, in the market, but the last 18 months prior to getting back in the market in August, we were out of the Canadian market. And the reason, it wasn't because of a lack of demand and a lack of commitment from the World Bank in terms of Canadian investors. It was simply due to the fact that the cross-currency swap. Our balance sheet, C5BRD, is in US dollars. So when we issue in the Canadian dollars, we need to swap it back into US dollars. So unfortunately, we need to take into consideration the cross-currency. And we also have a fiduciary responsibility to raise funds, as I say, at the lowest possible cost, because we're passing on that benefit to to the developing countries. So we need to compare the cost of funding in any currency, not just Canadian dollars, to say US dollars, to euros, and some of the big markets that we also issue into, and to be able to get the lowest cost. And that's the reason why we were thrilled when the cross-currency realigned a couple of months ago, that we were able to come back to the Canadian market and issue a $1.5 billion transaction. And the reception was great, and we want to thank all the investors that participated in the transaction and those of you that may potentially be in the room. It was a fantastic transaction, and we hope we'll be able to come back to the market fairly soon again. I didn't mention in terms of, you did mention in terms of the US dollars. US dollars is the largest source of funding for us. It's the deepest market. At least 2/3 of our funding come from the US dollar market. Our goal is to probably to diversify our funding source globally. And we have investors, and we issue not just in US and Canadian dollars, we issue on average within 20 plus currencies a year. But the US market is the deepest market for us. You mentioned that we did a very successful 10-year transaction. It's, in terms of duration, 10-year is a significant trade, a $5 billion trade in the US dollar market. We try to create a curve across all currency in terms of depth, in terms of liquidity, to provide investors liquidity in that market. We work with NBF, and I think in one of our largest transactions earlier this year, in dollars as well. So dollars, euros, Canadian dollars, the goal is to diversify our funding source, get the lowest possible cost so that we could pass that benefit to our developing countries to be able to fund those development projects.
Which makes a ton of sense, and that's a large number of currencies, which leads me to my next question is, it's a geopolitically tricky world right now, and could you talk a little bit as the head of funding, like how do you evaluate, what markets you're going to tap, given this context that maybe, relations between different nations are more strained than they have been, and how does that sort of factor into your thinking about how we're going to fund our projects?
Yeah, in terms of how we fund the bank with the geopolitical backdrop, what we have observed is an increase in volatility in the market. But I guess everything is relative. Volatility, market disruption, that's relative. But it hasn't impacted our ability to access the market. As I mentioned earlier, we funded the highest amount in the bank history, $64 billion this year. So it has not impacted. What it has impacted is the way in which we approach the market. We got to be quick. We got to be very agile, because windows open and close very quickly. We're not the only issuer in the market. If we see a good window, sure, my colleagues, whether it's in Europe or my other colleagues in other institutions would see a good window. So our ability to come in and go out fairly quickly is becoming increasingly important. So like I said, we have fewer issuance windows, and we need to be able to fund, and we want to be able to fund at the lowest possible cost. So whilst, like you said, the geopolitical backdrop, and we have gone through many cycles. We have gone through many cycles, and each of them is different in one way, and in some cases, they are the same. So it has been, for us, has not impacted our ability to really fund the bank.
That makes a ton of sense. Could you talk a little bit about, you guys have kind of a range of financing mechanisms, different types of bonds. Could you talk about investor preference for the types of bonds and how you've sort of varied them over the years and kind of innovated within different structures?
We have been in the market, and I've been in the market, like I mentioned, for a couple of decades. And I have seen an evolution in investor preferences. When I started, I remember investors focus, and they're still focused on return. It's important. But we're seeing the advent of impact investing. We've seen more investors, I've mentioned that in the past, focus on impact. And we have been able to respond to the changes in investors' preferences and investor demand. And for example, we issued the first green bond, and that was in response to investors' demand. We have seen then investors that are concerned about climate risk and wanted to invest in climate-friendly projects. We, subsequent to that, have issued what we call more broader sustainable development bonds, which not only focus on green, but also focus on social. We are a big social institution. And so we have also transitioned as well, more recently you'd see in the last couple of years, with what we call outcome bonds. Mm-hmm. And outcome bonds is basically bonds where the return is linked to the performance or measurable performance in terms of a project. We have one example was the Amazon link bond. So basically investor investing in this bond where the return, part of the return was used to finance the reforestation of reforestation in the Amazon. So basically what it means, it was the largest outcome bond, $225 million. 46 million of that, so investor give a portion of that coupon, was used directly for that project. So investors take directly that project risk, and investors could directly measure in terms of the actual impact of the investment. In return, the carbon from that project, if materialized, is monetized, and investors in exchange will get a portion of that funds back. Got it. So we have done, I think that was the largest outcome bond project that we've done, and we have done, I guess, 5 so far, almost.
That kind of leads me to a big question. Like, obviously, you guys have different structures, but you also focus a lot on the impact and the outcome of what happens with your different projects. Could you maybe tell us a little bit about how you guys measure success? Like, what is a really successful, bond raise and project that you sort of align together?
You see, any project that we fund in the development world is fund to achieve positive impact. The main goal of the bank is to reduce extreme poverty and boost shared prosperity on a livable planet. We have a big focus now on job because we believe this is important in order to be able creating jobs. It's important to able to address the issue of poverty, because in fact it is estimated that in the next decade there'll be over 1 billion people looking for jobs. So that has been a big focus here. So helping countries, both in terms of the infrastructure, whether on the capital side or on the human side, whether in terms of fixed roads, healthcare, access to energy, education, because that's important. Also supporting policies to ensure or to build a private sector friendly environment to be able to mobilize more private sector funding into the country. So a big focus on jobs, and we believe that is important. There's also a big focus in terms of really trying to calibrate the bank balance sheet to be able to do more. Yeah. Like I mentioned, there's 1 billion people, that will be in the workforce. The private sector funds cannot do it alone. We need to be able to crowd in private sector funding. So working with other MDBs as well, working with the private sector to be able to mobilize more funding. So we actually, to be able to really be able to create impact at scale. So that has been the focus. So creating jobs is a big, big focus of the institution, and it's important in terms of elimination of poverty.
Yeah, that makes a ton of sense. Thank you guys so much, Andrea Dore. We appreciate you so much.
I really want to thank all the investors that have continued to support this, the World Bank mandate. So thank you very much, and I look forward to, we'll continue to be in the market, and I look forward to your continued support. I always say I sell two things, World Bank bonds, and hopefully I'm good at it, and if not, I also sell St. Lucia. Thank you, that's where I'm from.
Thank you. Thanks so much.